Hello, hello, hello. Welcome to Our Stock Trades. This is going to be one of the most important videos we make, as maybe this may be a pattern that starts a trend that we have all been waiting for. Okay. So without further ado, we're going to get straight to business. Again, this is a live. We're going to try to make this as fast as possible. If you have any questions, please display them in the chat and we'll be responding accordingly. So as always, we're going to get straight to the data. There's a lot of data that we need to talk about. Most likely, it's probably going to happen in March. I'm a little busy this month, but we're going to give you important, news right now. All right. So overall here, we have a good sign for small cap stocks, as this is the Russell 2000. As you all know, these are indicative of small caps. We can see here that we have the 50 moving day average in red and the 200-day in green. And what we're starting to see here is the red 50-day moving average is basically about to cross the 200-day moving average. Okay. Now, again, if you don't know what this is, that's totally fine. Again, that's what we're made for this channel, right? We went ahead and combining technicals and fundamentals analysis to basically have a very good understanding of what's happening in the market. So whenever the 50 crosses over the 200-day average, or historically what we like to teach is whenever the short day moving average crosses over the long day moving average, this is called a golden cross, okay? On Webull, it showed that it crossed yesterday. Absolutely. We got some smart... Hell yeah, right? And I love the group that we have here, okay? So this is called a golden cross, and that is really literally historically a signal that, we're about to enter a bull market, or AKA selling pressure is near its bottom low, okay? So we have this factoid that we need to go ahead and basically put within our minds, okay? Number two, if you go ahead and take the Russell 2000 after the first golden cross in at least 6 months, from 1982, again, yes, 82. We're very serious here. We don't look back 2 years from now. We take the whole thing when we look at it, okay? From 1982 all the way up to 2022, we can see all the crosses that we had. So once we go take all of these components, the data, and all of these issues that we had within these drops in time, we calculate the statistics for it, and what we see is the percent positive returns is a bit lagged. It's not as predictive in the short term, when in reality, I think the market is becoming a little bit more efficient. So we may see this to be a little bit shorter, but we do see in 6 months to 12 months, we have a positive predicted value here that it will show a median return in terms of the Russell 2000 around 7 to 21%. But again, the last time we had a drop this significant for small cap stocks was in the .com bust here. But what's interesting is this doesn't take into account all the other stocks that have dropped 90%. Some of the Russell 2000s have not, hence why the drop doesn't look as significant. Okay, so there you have it. Okay, so there's that. So there's that data point. Now, if you go ahead and take a look at the Investors Business Daily Power Trend Model, we are getting a signal that says buy. And you can look at the parameters of basically what is being used to instigate that this is a buy signal. So from there, this basically tells us that we have a golden cross, okay? And we have essentially a high probability that we are going to essentially get a bull market. Okay, now here it is. So I'm about to show you right now, as I'm going to show you Chamath Palihapitiya directly from the horse's mouth about what he says in regards to what he thinks is happening. I'm going to go ahead and put it up a little faster, about 1.5 times the speed, because I don't want to make this video longer than what it has to. I'm going to go ahead and increase the full screenness and mute myself and play this. And please let me know if you can hear it. Increase the volume here. Make sure the volume is here. All right, let's get...
All of the smart money in Wall Street that I talked to up until this point, they forecasted like this period would be choppy and the second half of the year would be really robust and like you needed to be super long and things were going to be incredible. And when I talked to them this week, they're like, oh God, we weren't positioned for this. We had no risk going into this. We're going to be forced buyers.
Exactly. So Wall Street is essentially about to be forced buyers. They're about to basically FOMO. And what's funny is last week, or Wednesday, Thursday, a lot of our private stock group members believes was basically saying, Wall Street FOMO is in as well. They experience FOMO as well. It's not just retail investors experiencing FOMO. And that's actually interesting, right? And again, just a very quick plug-in. We do have our 20% off Valentine's Day coupon for our mastering and lifetime access. Will be linked down below about that if you guys are interested to get access to all of our hedge fund information. And you can learn more about that on our website. But let's continue with what he's saying.
There's a bunch of companies that are whispering that they want to go public now.
Oh,
and
really?
So the big banks have been calling around trying to book build quietly for some IPOs. And so if they try to kind of crack this capital markets open, I think there's, again, the marginal risk will be that we do whipsaw access.
When you say book build, you mean trying to see if you'll get some early takers to buy equity in an IPO, perhaps even in a company like Stripe that's been sitting on the sideline?
So not Stripe, they're in a complicated moment. But when they call to book build, they basically say, hey, listen, XYZ company, quiet filed, look at the S1, what do you think? Where's the price? Blah, blah, blah. And they're trying to get an indication of whether you'd want to be in the IPO book. So I think that there's a lot of those testing the waters that are now starting again.
Would there be an appetite in your mind for an IPO in the second quarter of like a Stripe type company? Putting, I don't know what the other candidates are, the lead candidates, but Stripe is the one people talk about most.
The thing that we have to think about is like most of the market are not people, right? Most of the market are computers and algorithms and ETFs. It's an extremely formulaic buying model.
So I'm going to go ahead and basically summarize what he says. If you can go ahead and it's episode 114. It was just basically posted in about 15 hours ago. And basically, Chamath Palihapitiya talks about how, when there's algorithms that are placed, right? And when selling pressure basically starts to happen, the algorithms basically start selling. And the human factor is in front of the algorithms to basically push the algorithms to sell. Now, what's interesting is when we're about to enter a bull market or when the stock market is about to basically increase, you start seeing the human factor start pushing up these stocks, and then the algorithms, go ahead and extend that. So there's, in that regards, what he believes is going to happen. He did talk about in this video, and we can go ahead and make a dedicated video about this, but he did basically talk about how the Federal Reserve, in terms of the body language, was extremely dovish. And that's it, and the issue here is the jobs related market. And we'll get into the economic signs of that, of how the jobs market came out really strong. And maybe that could basically cause a Caesars, kind of a sawing pattern motion where we do think it's going to be a bull market, but then all of a sudden the Federal Reserve has to recapitulate its capitulation, increasing rates again because inflation basically ran out of control. There's a lot basically that's happening right now that makes the market uncertain. But I do have to say one thing very closely to this, okay? So I'm going to go ahead and stop sharing here, and I'm going to go ahead and open up a new screen to share so I can go ahead and show you guys what I'm talking about, okay? So overall here, if you look at smart money and dumb money, now again, yes, I have contacts on Wall Street, from what the data that we use and everything. But the thing is, I don't have whispers that I get like Chamath Palihapitiya. I'm not a billionaire, right? I don't have whispers, but I do have data. And I do have the same data that these hedge funds uses and these Wall Street individuals use. And what I can tell you right now is that smart money was trying to get into the market in the back half of 2023, like third and fourth quarter of 2023. But however, the signs shifted. Jerome Powell went ahead and became extra dovish. And now what they're going to have to do is this weekend when the markets are closed, they're trying to figure out how to enter and should they enter. And if they enter too early, could it basically cause more liquidity in the markets and you get a bunch of IPOs start coming in and a bunch of money just slushing around in the economic form, which basically increases interest rates, which then perpetuates the cycle, right? So this is what's happening. And what we might see, this image here is the same image as basically what we thought of when we saw it in 2008. And I think I have an image here for you guys of how it looked like in 2008. I put it in here. So I think, let me make sure. Here it is, 2008 to 2009. We basically saw dumb money took off and smart money said, wait a minute. And then stocks started to dip again in 2010. And then that's when dumb money started selling and smart money basically started buying. So this could follow the same playbook. And what I mean by the same playbook is that 2009, dumb money came in, enjoyed a beautiful year or two. And then all of a sudden, maybe, another 3 to 4 years. And all of a sudden, also in 2014, 15, stocks dropped a little bit because of the taper. And then smart money came in and basically stole the shares and all the gains that dumb money had. And what I mean about that is the CIA chief warns against underestimating, the president of China about his invasion towards Taiwan. Burns said that the United States knew as a matter of intelligence that Mr. Z here had ordered his military to be ready for the conduct and invasion of self-governed Taiwan by 2027. And we can go ahead and go down that tangent in regards why Taiwan is important because of the semiconductor chip plays. But what's interesting that we need to understand is that maybe the bull market might start now, and we may have a temporary short-term setback because China might start basically flipping the Wall Street circuit breakers to basically start decreasing stocks as smart money tries to exit, or more specifically, dumb money, and then smart money can jump in and take those stocks. But I'm just basically trying to give you what I'm looking at in terms of the horizon. But overall, what I'm seeing now is that smart money may capitulate now and may start FOMOing in. What's interesting here is this is the equity hedging index. And like I told you, the best times to buy is when the equity hedging index is basically screaming a tall peak, which is what this is here, which is the 2020 pandemic. We had it peak here, but guess what? Now it's starting to fall. And we know that as it's basically starts to fall, we basically start seeing a great run up, a bull market run up. And this green line that you see here is the 200-day period moving average, which is a statistical average on top of a statistical indicator, which is the equity hedging index, which basically represents data that unfortunately small retail investors don't have access to. Okay. So there's that type of analysis that we're basically seeing. So this is kind of my summary of what's happening. Obviously, there's more that I can talk to you about, but again, I want to make this a short freaking video, right? So that's all I have for you guys. I'm going to go ahead and go through these questions here. I think you mean third quarter of 2022. Yeah. So I think that Wall Street wanted to come in the third quarter and fourth quarter of 2023. That's what I meant by that. What you're talking about when they wanted to. Okay, yeah, there it is. Sorry. Okay, I just saw that. But overall, guys, there's a lot of excitement to basically talk about. Is it natural for a stock to rise in a month or two, 40%? No, it's not. Is this going to make Chamath Palihapitiya basically start FOMOing in? Most likely. He's no different than us, right? And you know that we may see a FOMO and start to happen in terms of tax loss harvesting, to be reinitiated to buy all the stocks that he basically dropped. And he dropped them at around a 170 or something. So he can buy right now and he'll still be in the loop, right? So, so that's pretty much basically what's happening right now. So if you guys like our content, like the data that we have, like our stock terminal, and want to learn more about our Mastering Stock Market course with our intrinsic value calculation, we do have an early February 14 Valentine's Day coupon code. I don't want to put it near Valentine's Day because I might forget because I'm going to be busy during that time. So I just put it here so people can just take advantage. It's a pretty I think it's like $300 off or something. It's a pretty big chunk. And definitely want to be able to help the retail investors thrive in this market. There's going to be a lot of millionaires that are going to be made during this time. And I hope that we're able to assist with that transfer. God bless each and every one of you guys, and I will see you on the next one.